What's up guys, my name's Curtis and welcome to 5 Minute Finance, where I take personal finance topics and explain them to you in 5 minutes or less. Towards the end of last week, I stumbled across a couple articles talking about how the S&P 500 is going to double by the end of this decade or reach 8,000 in the next 8.5 years. Or this insane article talking about how the S&P 500 might hit 14,000 by 2030. It was the first two articles that really caught my eye, not because they gave some random price target for a market index, but because of the reasons why they said it might hit those targets. Both of these articles argue that this is due to a change in economic policies. Because of very low interest rates right now and the potential chance for increasing inflation in the coming years, the articles argue that investors are going to prefer to hold stocks over other assets, thus causing the stock market to double in the next 8.5 years or so. But that got me thinking. We've seen relatively low inflation over the past few decades, and we've had all different kinds of economic policies and government leaders, yet the stock market has still performed pretty well, assuming you were holding long term. So I wanted to take a little bit deeper look into the S&P 500's history to understand whether or not it could hit 8,000 by the end of this decade. Now, I'm sure you've heard me say on this channel before that historically, the S&P 500 has returned about a 7% average annual return adjusted for inflation if you reinvest the dividends. If you got an average 7% annual return, that means your portfolio would double in just over 10 years. So seeing the stock market double by 2030 wouldn't really be all that shocking. But what we're talking about here is just the face value of the index. We're not including any dividends, any inflation, anything like that. We're just looking at the dollar value of the index over time. So let's take it a step further. I found this website that simply shows the value of the S&P 500 on January 1st of each year, and it dates back many decades. I then put that data into an Excel spreadsheet and created the chart that you see here, which shows the S&P 500's 10-year rolling return, assuming no reinvested dividends, and we're not looking at inflation at all. To help explain what this chart is depicting, as an example, I took the value of the S&P 500 on January 1st, 2021, and I compared that to the value of the S&P 500 on January 1st, 2011. That gave us a 196% increase in the value of the S&P 500 over the last decade. I then continued those calculations back to the 10-year period ending in 1980. What I found especially interesting was when you look at 10-year periods, there were only 3 times where the value of the S&P 500 went down. But that's not the point of this video. I put this chart together to understand whether or not it's realistic that the stock market will double by the end of this decade. And to answer that question, just look on this chart and see how many times we saw the value of the S&P 500 increase by over 100% over a 10-year period. Guys, starting with 1970 to 1980, over half the time, if we're looking at 10-year periods, the S&P 500 doubled, tripled, or even quadrupled. As I mentioned earlier, this happened with many different government leaders and policymakers, and imagine if we included dividends into this equation, it would be even better growth. So back to those articles I mentioned at the beginning and the question of this video. Will the S&P 500 double to 8,000 by the end of 2030 or in about 8.5 years? I obviously can't guarantee that, and nobody can guarantee that. But looking at historical performance, I'd say there's at least a 50% chance, probably higher, that the S&P 500 does top 8,000 by 2030. With that being said, if the market does double, will it be because of low interest rates and high inflation and change in economic policies? That'll have a little bit of influence on the market, no doubt. But at the end of the day, policies only have so much influence on the market. The stock market's always just going to do what it does, and that is, over the long haul, it's going to go up. Now, past performance doesn't always indicate future performance, but if you said that 10 years ago, you would have missed out on a lot of growth. So it's always best to just stay invested and assume that the market's going to go up over the long haul. Again, I can't say whether or not the market is going to double in 8.5 years, and this may have been a long way to answer the question of the video with, and I don't know. But I do know this, if you're in the stock market for the long game, you'll always end up ahead. As Warren Buffett says, the stock market is a device for transferring money from the impatient to the patient. If you guys enjoyed this video, it would really help me out if you gave it a thumbs up. And if you're new around here and want to see more personal finance videos in the future, click on this globe right here to subscribe.